This week, earnings seasons begin in earnest with reports from the major banks. J.P. Morgan Chase, Bank of America, Wells Fargo, and Citigroup, along with two huge investment banks, Goldman Sachs and Morgan Stanley. Coming to earnings, there was some concern that the banks, which had rallied hard after Trump won the election, might not be able to cope with the action in the bond market. There was a fear that rising long-term interest rates might cool down the economy and do real damage to the financials. But it turns out Wall Street had nothing to worry about because we got a cooler than expected consumer price index report on Wednesday. And because the banks, well, they're all doing great. Now, I usually try to walk through these one by one, but because we got all the major financials in a single week this time, we're going to split it up into two segments, doing the national banks first and then the investment banks after the break. Why don't we start with J.P. Morgan, which got things going on Wednesday morning when it reported a just terrific quarter. Huge sales and earnings beat. All three of J.P. Morgan's major business units came in better than expected, but the biggest source of upside was their commercial and investment bank, which put up 18% revenue growth. I mean, come on, that's amazing. This was driven by a 49% increase in investment banking fees, 21% increase in markets revenue, and I've got to tell you, those are incredible numbers.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.